Hey guys, thanks for stopping by. Have the 7 rate increases in 2022 done enough to reduce the inflation rate? Well, before that, I'm Michael Keogh from Team Keogh at RE/MAX, and we help people buy and sell real estate in and around Barrie and Simcoe County area. So hit that subscribe button down below if you want to stay up to date on any Barrie and Simcoe County real estate. Hit that little bell as well, and you're going to be notified whenever we put out a single video, and you won't miss one. As well, hit that like button, and what that does, first of all, if any of the information I've given you has been beneficial, and what that will do is that will send it out, notify the people that need this information. They will get it by hitting that like button. So, have they done enough? Well, the Canadian economy started off the year in 2022 with a remarkable recovery from the pandemic. It was kind of crazy. But heading into 2023, higher interest rates are expected to take a significant toll on that. So, as we know, 2022 was a bit of a roller coaster. After taking a deep plunge during the pandemic, the economy bounced back this year with strong growth, record low unemployment, and the housing market, thanks to low interest rates and lack of supply, was absolutely crazy. So, and this all led to arguably the most pressing economic issue of the year, which is decades high inflation. So, in turn, the Bank of Canada responded by rapidly raising the prices or raising the interest rate 7 times last year, which is the fastest that we have ever seen in history. So, so one economist says we're really expecting to see the rubber meet the road in terms of the implications of interest rates in the first half of the year, that being 2023. So since March of 2022, the central bank has raised the interest rate 7 times consecutively, and they started at 0.25% and raised it up to 4.25%, which is the highest we've seen since January of 2008. So inflation peaked in June of 2022 at 8.1%. Since then, we've seen a steady decline, and as of December 2022, we were sitting at 6.3%. So one factor that will influence the depth of this downturn that we're having is whether the Bank of Canada will continue to raise interest rates. All indication shows that January 25th of this year, you'll see a 25 basis point increase, which is a 1/4%. As higher interest rates begin to weigh more noticeably on the economy, discussion will turn to cuts that they will make to maybe interest rates leveling off or coming down. But most of the talk that we're seeing is the Bank of Canada is they can't keep these rates high for very long. They're expecting rate cuts near the end of the year, supporting a bounce back for the economy. So I think we may see 1 or 2 more rate increases before all of this happens, to the tune of about 1%. So the government's actually, they're heading towards, or they're trying to shoot for a 2% inflation rate, which is almost impossible considering we're sitting at 6.3. That's a long way to go until we get to there. So employment rates are still very high. Unemployment rate is very low. So and this contributes to inflation. So more people working, spending more money. So there's less supply and more demand. So there's inflation. So it's kind of weird. We want people to go to work, but not too many of those people, because too many people, there's too much money in the economy. So therefore that causes inflation. Crazy. So what they're trying to do is get the perfect balance between unemployed people, employed people, so that there is 2% inflation rate. Kind of crazy. So what have we had? We've had the rate increases helped with inflation because, so have the rate increases helped with inflation? Yes, a little bit. But this is only one piece of the puzzle. Inflation has gone from 8.1 to 6.3% with a goal of 2%. Interest rate increases, but so that's one of the issues that helps. House prices have come down, but now more people will buy houses. There's more people working. So it's not just as simple as raising the interest rates. It has one cog in the wheel to help this out. So in summary, I believe we're going to see another a rate hike is on the horizon. June 25th is one, and I think we're going to see 1 or 2 more before this all levels out. There's a bit more pain for Canadians. I believe that your belts are going to have to be tightened a few more times before things get better. So Anyway, guys, if this information at all is helpful, please reach out. You can just click on the link down below and you can book a call with us. 1 or 2 clicks later, you can book a call that's at your convenience. So anyway, guys, have yourself a great day.